Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week, bottom fishing for beaten down stocks. Joining me, as always, Zacks Maestro of Stock Screens and head of the Research Wizard division of Zacks.com, Kevin Matras. So it sounds like you're really talking about that old adage, buy low and sell high.
Yeah, we're still talking about that. I wrote about looking for bottomed out stocks a few months back, and, I really wanted to revisit this topic again after the market had put in such a dramatic new low a couple of weeks ago on October 10th. In this week's screen, I'm looking for companies that I ordinarily do not look at.
Okay.
I'm looking for companies that have recently hit or are trading at their 52-week lows. And my belief is that if the broader markets have indeed put in a bottom, I think these solid companies are going to have a lot of upside potential.
Okay, so this doesn't mean, though, that they have to be low in price, right?
Right. They don't have to be cheap in price. They just have to be the cheapest they have been trading at within the last 52 weeks. And again, the ones I am particularly interested in are those companies that have recently just come off of their 52-week lows. And again, the reason why I think these are good companies to look at now is because if you take a look at it, the market has gone down pretty much. I mean, we have seen just a huge sell-off, but there has been plenty of stocks that have done pretty well, that have completely bucked this downtrend. But I think a lot of those companies are ultimately going to come down, and some of those companies will fall out of favor as new sectors and new industries take on new leadership roles. So I am looking for these companies that have recently been neglected, have recently been getting pushed around. And I think as these companies start to get noticed, these companies will have a lot of good things and a lot of good upside potential.
Well, let's not neglect them any further.
Yeah.
What are the parameters of the screen?
All right, check it out. The screen starts off by looking at companies with a Zacks rank of a 1 or a 2. Only strong buys and buys are allowed. If you take a look at the Zacks rank, you can see that the Zacks number ones over the last 20 plus years has shown an average annual return of over 30%, and the number twos have shown a return of nearly 20%. The fours and fives, however, which are the sells and the strong sells, those are the ones that have underperformed the market the most by showing returns of less than half as much or worse than what the market has done. So again, only ones and twos can make it on this screen.
Got it.
The next thing is I'm looking at the percent change in F1 earnings estimates over the last 4 weeks and F2 earnings estimates over the last 4 weeks. I want to make sure that the analysts covering them are getting more bullish and raising their targets, especially in this kind of an environment. So those are two very important things. Next, we're looking at the year-over-year projected EPS growth rate, and we're saying it has to be greater than 20. Excuse me. So these companies have to have a growth story, and especially now, if you were to look at companies with a projected growth rate of over 20%, especially with the kind of lowered expectations that we're seeing in the marketplace, a 20% growth rate and above, very, very impressive.
All right.
Then, the key that helps me find these low-price stocks, or I should say these stocks near their 52-week low, is the current price divided by the 52-week high-low range, and it has to be less than or equal to 0.2. What that means is this. This is a ratio. If the ratio has a value of 0, that means the stocks are trading at the 52-week low. If it has a ratio value of 0.2, that means it's 20% off of the low. This screen says, show me companies that are trading within 20% off the low. I don't want them to have gotten too overextended on the upside. So we're finding companies that, in my opinion, are in this sweet spot.
And as a point of clarification for our audience, is this just another way of saying undervalued stocks?
In a way, I mean, some of these companies may have some PE ratios or other valuations that would be higher than what your typical value investor would look at. But this is more or less looking at companies that truly have been beaten down in price. Valuations, you'll probably see those valuations come down as well, but it's not a criteria. It doesn't have to be that way.
Okay, and I'm sorry if I interrupted you. Did we get through all the parameters?
Yeah, the only last parameter is that we are applying all of those other things to stocks that are greater than $5 and at least have 100,000 shares traded on a daily basis.
Okay. And you know my next question, as always, one example that came through the screen.
Oh, you completely tripped me up on that one. One of the companies that came through is a company called NTLS. Ticker symbol is NTLS, and they're a leading provider of wireless and wireline communication services in Virginia and West Virginia. They operate branded retail businesses under NTLS and wholesale businesses with Sprint Nextel Corp. If you look at some of the valuations that they have, though, they came into the week with a Zacks rank of a 1, which is a strong buy. Their projected growth rate is 55.52%, so they have a spectacular projected growth rate. Their F1 and F2 earnings estimates are very impressive. If you were to look at it over a 4-week basis, they are up 0.42% and 0.81%, and 32.76% over 12 weeks for F1, and 13.42% over 12 weeks for F2. Very, very impressive earnings estimate revisions. They're currently trading just 10% off of their 52-week low. Let me pop up a chart. And what's interesting, too, is that you're going to find a lot of the companies that come through the screen, you're going to see these companies, putting in double bottoms or rounded bottoms or spike bottoms, V bottoms, this kind of thing. And if you look at NTLS, you can see they have a very nice double bottom formation right now. And I think this company looks very, very exciting.
I never would have known that unless you pointed that out. Do you own the stock?
No, I don't.
All right. You can always read about the most current screen of the week online at Zacks.com. This week is no exception, and if you go there and link to this story off of our homepage, you can even see 2 more stocks that came through the screen that Kevin has written about. With Kevin Matras and the screen of the week, I'm Terry Ruffalo.